Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar is holding above the 71-cent handle but still lacking momentum to push through that key area of 71.35. The upward move supported by a softer US dollar after the US dollar index fell to 98.85 had improved global risk sentiment, while China's stimulus measures provided an additional tailwind for the Australian dollar. On the domestic front, for the data, July employment unexpectedly fell around 16,000 and unemployment edged up from 4.4 to 4.5, calling expectations for another near-term RBA rate hike. Meanwhile, on Wednesday, the Fed minutes showed several policymakers were prepared to raise rates in July and may still further tightening as necessary if inflation remains elevated. However, softer US data since the meeting has reduced expectations for a September move, leaving the RBA Fed rate outlook finely balanced. So looking at the technicals, well, there is a bit of divergence here that is bearish, and along with that, with the 71.35 capping, the market could see profit taking come back again, so we should not rule that out. Look towards 70.80 as a break, as this would open the way back towards 70.5 and reassess. A very strong rally in the euro, and one that's quite impressive, and not since May that we saw the rally as strong. And along with that, the dollar index plummeted to 98.85 this morning. In other stories, Washington announced that measures to calm recent stress in the US bond market has added a bit of pressure on the US dollar, and also the Fed minutes were more hawkish than recent US data might have suggested, as therefore given the upward momentum for the euro. I'm a little bit on the cautious side around this area above 116.5 in case we get a snap back to the downside around to 115.70. Dollar yen, well, finally we got that move to the downside, and it was quite spectacular after the hanging men and the sideways movement, and not able to capture 160 has put the bears back into a comfortable position. Now, that being said, I would like to see a little bit more to the downside and possibly seeing a move back to 156 and reassess. A very impressive move when it comes to sterling as it breaks through 135.60, and now we can lift this up to the highs that were seen back in April. Could find a cap here around 136.50, and if so, we may see profit taking back to 135 and reassess. The upside call 4,500 reached and now left me neutral. With the target reached now, we've got to keep an eye on these technicals. They are buckled, so I'm a little bit not as bullish as I was previously, because I felt there would be a snap to the upside, which has come through. MACD was supporting that, but now the RSI has shown a bit of divergence here, so may see a bit of profit taking, and time now to reassess. Wrapping up with oil, well, the market is a little bit weaker. MACD is also a little bit questionable, but I still feel that the market may play within a range of $80 to about 86.5 as a broad call, and inside that, I'm neutral. But that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to the day.